Welcome to Investor TV. I'm Michael Switow. Today we navigate the world of blockchain, taking a look at top trends and investment strategies. We have a great panel for you. Dan Reitzik is the CEO of Big Digital Assets. Russell Starr heads up capital markets for DeFi Technologies. Dean Skirka is the CEO of WonderFi Technologies. And Gorav Seth is the head of capital markets at Richardson Wealth. They're one of the largest independent wealth managers in Canada. Gentlemen, welcome to the show.
Thanks for having us here.
Now, while Bitcoin and other tokens tend to dominate the headlines, blockchain is like the workhorse behind the scenes that makes it all possible. For those of you who may not be familiar with the sector, let's start with a key definition. Blockchain, it's a decentralized, distributed digital ledger that's based on cryptography, and it records transactions across a network of computers. It's built to be transparent, immutable, and secure. Blockchain technology underpins cryptocurrencies, but there are also a broad range of other applications and investment opportunities. You name it, from finance to supply chain management, even filmmaking. So I'd like to kick off today's discussion by exploring a few different ways that blockchain technology is being used, starting with real-world assets and something called tokenization. That's the process of converting ownership or rights from a real-world or even a digital asset into a token on a blockchain. Just about anything can be tokenized. Property, businesses, commodities, you name it. Gorav, from your experience, what have been some of the best examples that you've seen of successful tokenizations?
Art, and they were taking clips, little video clips and tokenizing that. There's OpenSea, which is, the entire NFT side, tokenization of royalties in music. There was a firm out of Spain, I think called Centera, that tokenized a bond issuance. So you can tokenize securities as well. There's another firm called Proppy that was tokenizing real estate. You are starting to see more and more examples of firms adopting the tokenization of real world assets.
So Citigroup believes that tokenization could be the, quote, killer use case that leads blockchain to really break through into the mainstream. It expects the market for tokenization to grow 80-fold over the next 5 years to $4 trillion US. I'm wondering though, Gorav, why hasn't tokenization already gone mainstream? What do you think are the biggest hurdles?
There isn't clear regulation for tokenized assets that makes it relatively difficult for institutions and investors to engage. Many of the larger institutions still lack the understanding and trust in blockchain. Traditional investors as well. It's a relatively nascent industry. And by virtue of being a custodian of other people's capital, these institutions are relatively conservative in their approaches. So it takes time and new technologies.
I get that. Yeah, a lot of people who follow Investor TV and our sister platform Stocks to Watch are commodity investors. In fact, our last panel was about investing in gold. Since then, I spoke with an analyst who is bullish on tokenized gold. He notes that it can be traded 24/7 in any amount. And it's definitely a lot easier to transfer or move from one place to another than physical gold. So viewers, keep a lookout for that. Another area that has enjoyed significant uptake when it comes to blockchain technologies is e-gaming. One of the most popular blockchain-based games out there is Axie Infinity. Players collect, breed, and battle creatures called Axies. They're actually NFTs that the players own. Russell, your company has invested in a massive multiplayer game called Wilder World. It leverages blockchain as well. Tell us, why do you think gaming has become one of the most popular areas for blockchain adoption? What does blockchain technology offer to gamers that traditional gaming platforms cannot?
Look, it's a natural extension of where this ecosystem is going. Wilder World obviously is a metaverse-driven game where you can effectively, it moves the world theoretically into the gaming infrastructure. And you've seen, multitudes, Call of Duty, there's so many games, literally everybody is enjoying this. I've even found myself in my old boring moments playing Call of Duty, but the natural extension of where blockchain can go, just as Gorav was talking about tokenization, is into the metaverse. And Wilder World is obviously a perfect example of that. We're just really, really fortunate to have, Anthony Pompliano as part of our team. Ollie and Johan, we get access to these Series A, Series B type opportunities to invest. And you're effectively creating another world, another dimension. You're showing it right now, 5D, where you can actually, it almost seems crazy, but you're seeing movies about it, but you can extend your own reality into these gaming plays. So it's a pretty cool application of blockchain.
Do you enjoy playing it?
I've never ever actually played in the Wilder World New Dimension. I know some people who have. It's picking up a lot of momentum. I think it's working on a joint venture now with Epic Games here imminently. I may be wrong there, but I believe that's the case. So, you should see a lot of these mainstream games going live in these new blockchain type applications.
I read a Global Market Insights report that was published recently. It estimates that Web3 gaming market is currently worth about 26 billion US dollars. And with a growth rate of close to 20% a year, it could top 100 billion by 2030. Another report by DAP Radar shows there was more than $1 billion US dollars worth of new investments in Web3 gaming during the past quarter alone. That is the highest level in 2 years. Now, Dan, I know you're quite passionate about Web 3.0. That's the next phase of the internet that is decentralized and it's built on technologies like blockchain. Your company is also quite active in creating digital worlds like virtual discos and metamalls. I'll pull up an example in a moment, but tell us, what is the role of blockchain there? How are you using it to create digital assets and improve the meta experience?
Well, I mean, metaverse is really just the next version of today's internet. It's a portion of Web3. What you're looking at now is something that we do with Napster. You guys might remember Napster 25 years ago, they changed music. Napster is now a streaming company with 3 million users. Spotify has a couple hundred million. And what Napster wants to do is they want to reach the 800 million players in Roblox, Fortnite, Minecraft. These are people 16 to 20 now that have grown up in these immersive worlds where they experience things, but it's not just about gaming, it's about socializing. What we find in our projects that we do with Fidelity or PwC or Bacardi or any of these others is that people don't just go in there to game, they go in there as their social network. So in other words, like we used to go to the mall to talk about the movies that we liked or the teachers that we didn't like. The next generation, the Web3 generation, do that inside of these types of worlds. So this is Napsterverse. This is one use case of TerraZero's Introverse platform. It basically this one here allows people to visit right from the Napster app. They can visit Rick Wilson's Discoverse. They can interact with Rick. They can use crypto. They can use fiat through an integration with Stripe in order to buy various things like concert tickets, merchandise. We talked about NFTs. NFTs, one of the challenges with NFTs in the past is you might buy them, and then what's the use for them? How do I show them off? With Introverse, every one of these users, whether it's Napster or one of our other partners, all their users get their own space. That is where they can display their NFTs. That is where they can do certain things. So essentially what we're doing is we're sort of bringing, we believe it's Web 2.5. I don't think we're quite ready for full virtual reality. It's a little bit dizzy, but we are definitely ready for a more mature version of immersive worlds such as Roblox right now.
We talked about tokenization just a little while ago, and one thing I'm wondering is, what is tokenization like in the digital world? What are you seeing in terms of tokenizing those virtual properties?
Yeah, I mean, everything can be managed by blockchain. In the early days of metaverse, which, early days being a few years ago, you had worlds like Decentraland. We built various applications inside of those kinds of worlds. And they were essentially like a grid, almost like Bitcoin, where there's a finite number of parcels of land, for example. And in order to build anything and be a creator and generate revenue in this new immersive world, you needed to own that land. Well, the land ownership was represented as an NFT. So you could essentially, instead of having a central repository where you would, hold different assets, digital assets like an NFT that represented land, this would all be decentralized. In the Napster example that I was talking about, the whole point is to collect badges, to collect items from your favorite artists. There will be ways to purchase an NFT that will allow you to listen to a song from your favorite artist a day before it's released to the general public. So these are the kinds of things that can be digitized. But pretty much anything that you see inside of a video game today will, in Web3, be considered a digital asset.
Very interesting. Dean, I want to bring you into the conversation now. What sort of real-world applications have caught your eye, particularly when it comes to blockchain and finance?
Yeah, look, I think in terms of some of the best use cases we've seen, up to now, I think it'd be hard not to start with stable coins. And so you think about US dollar stable coins, tokenizing the US dollar, allowing for these dollars to transact on specific chains and in some instances across multiple chains. You think about the two biggest stablecoin providers, one being Tether and the other being Circle. You're talking about over $150 billion of digital dollars across multiple chains and ecosystems. I think that would probably be, the best use case that I've seen to date of tokenization of, call it, real world assets, in this case being the US dollar. I think the evolution has shifted from, the days where, hey, maybe we tokenize 10% of a condo building in Manhattan or tokenize farmland somewhere in California, and has shifted to more practical applications. More recently, over the course of this year, there's been a platform called Ondo Finance that has performed exceptionally well, and they've tokenized US Treasury bills. And so you think about $150 billion of tokenized dollars on the blockchain. What if, or how can those dollars access yield, in effect, as if they were real dollars or physical US dollars? And so Ondo has created a platform where you can tokenize, where they've tokenized US Treasuries that would enable anyone holding USDC or USDT to generate the same yield that they otherwise would if they were holding real dollars. That platform has over $600 million locked on their protocols today. And so that's clearly an example of, the tokenization of real world assets that has found traction within the crypto ecosystem. And so I think you'll start to see, more of these, applications unfold. You mentioned gold. That's probably another good example where, there's a practical need for diversification and for some of these investors to want to hold gold, at least, for some period of time or as part of a broader strategy. And so I think you're starting to see the building blocks through, the increase in use of stable coins, and obviously the broader adoption rates within blockchain around real world assets and tokenization of assets where there is actual demand and liquidity being created.
Makes a lot of sense. I know some people who had an event here in Singapore where I am just this evening, and they were talking about stablecoin. Definitely a hot topic. Another example here in Singapore where I'm based has to do with the mutual fund industry. Regulators are using smart contracts, which are built on blockchain, to transform the sector. Currently, it takes a week or even longer to settle transactions. Just picture a flurry of faxes and emails between investors, fund managers, registrars, anyone who's involved. Well, the Singapore Stock Exchange, in partnership with the state-owned investment company Temasek, they have a new blockchain platform that is cutting that transaction time from more than a week to just 2 business days. And the mutual fund industry, that is huge, worth more than $100 billion here in Singapore alone. All right, sticking with finance for a moment, when Satoshi Nakamoto published the original white paper about Bitcoin back in 2008, she or they provided the framework for an alternative financial system. Fast forward from then to 2024, cryptocurrencies have definitely become an established asset class, but in terms of being a store of value or a medium of exchange, well, most stores and most banks do not accept it. Russell, your company has identified and invested in a financial institution that may help bridge this issue. It's a regulated crypto bank. It's located in Europe, and it's called Amina. Tell us a bit about it.
Look, we made the initial investment. It was called SIBA Bank at the time. They had about $1 billion in revenue, $1 billion in assets. They're now probably closer to $4 billion. To be perfectly blunt, the biggest issue has nothing to do with the global perspective on crypto. It all actually resonates and starts in North America. The SEC and the Canadian regulator are, I believe, heads in the clouds, probably not taking a practical look at the benefits that this ecosystem can bring to the globe. The rest of the world is wide open. And you've even seen recent efforts by Russia and China to embrace crypto post not embracing it for a while. So I actually think, honestly, this is a tidal wave that's never going to be able to be stopped. If you just look at it from a practical perspective, a lot of people figured after FTX, Bitcoin was done. There's been so many black swan events, so to speak, that you think would have derailed this ecosystem. But here we are, crypto or Bitcoin's almost at 60,000 again. And these banks, there aren't a lot of them. Amina Bank is one of the sort of the preeminent. There's another one in Switzerland called Signum. There's one in Puerto Rico as well. But I think you're going to see a tremendous flow of capital into these institutions, especially when you think about the Swiss banking mentality, and actually having a 5% ownership in this as cheaply as we got it for where it now actually sits is going to be something that's going to be really beneficial, obviously, to DeFi. But I think you're looking at really truly just sort of a nexus of negativity in North America that, as much as, you think Trump is going to implement sort of a Bitcoin treasury strategy if he indeed wins, you're also seeing a bipartisan movement out of the US that I think will transform this opportunity. So yeah, we're fortunate, we're lucky. No one's actually giving us any value for it in our company, which is kind of ironic, but I do think it's a tremendous opportunity for our company. And I think you're going to see, like I said, everyone starting to migrate to these crypto opportunities, just the way they did with the internet.
Today's discussion is also an opportunity for our viewers to ask questions of the panelists. To do so, just find the Q&A button on your screen. If you're on a PC, that Q&A button is at the bottom center of the screen. If you're on a tablet, it's located near the top right. In fact, I'm going to go ahead and take a question right now. One of our participants asked, do you believe that central bank digital currencies, the CBDCs, have a place in this world? And if so, why, yes or no? Dean, you want to hop on that one?
Yeah, sure. Not my area of expertise, but I think it's something that is seemingly being developed by certain countries. I think there's certain benefits in terms of what it can mean for the actual residents of these countries. I know there are some concerns with oversight and the level of information or access and control that the regulators or governments would have in the event that CBDCs were implemented. And so I think there needs to be a lot of work done on this area in terms of striking that balance between, truly unlocking access to residents and allowing them to more freely move their capital or, invest across a variety of different asset classes, transact 24/7 as needed, but also balance some of the oversight concerns that are raised by, the level of, I guess, access or control that theoretically these governments would have through a CBDC. And so I think you'll see perhaps some smaller nations adopt them, but probably longer tail for some of the more mature markets to actually implement these into their country's infrastructure.
Gorav, one of the things I think that's tricky about blockchain is that it's a back-end technology. It's used for infrastructure. But unlike bricks and mortar, we can't really wrap our hands around it. Neither is there a consumer interface that allows us to easily visualize it. On top of that, blockchain projects, they come and go. They can be risky. For example, I was reading an article in International Banker. It was published a year ago. And it was talking about a company called Freeport that had this great concept about fractionalized art. But, a friend of mine went to check out that site this week, and the company's already shut down. So my question to you is this: how do you evaluate a good blockchain project?
I think there's a lot of elements that you would use to diligence a typical company as you would with a company operating in the blockchain space. I look at deals very often, constantly looking at venture opportunities and private equity and new issues. And really, the first place I start is I look at the team and the governance structure. Who are the people behind it? Are they credible? Do they have a track record of success? Do they have domain expertise? Is there something instituted to provide some governance for investors? The other thing is, similar to capital markets, I look at cap structure. So tokenomics are another piece that are important to be looking at. Typically, a company, a stock, or a token will move up because there's more supply than demand. So you'll want to know, is there a deflationary or inflationary pressure to the token? Are they burning tokens constantly? Is there some type of burning mechanism? Are they inflationary, where they keep printing new tokens? Where's the demand going to come from? Are there vesting or escrow periods that would impact buyers in the marketplace? Is there going to be a wall of cheap tokens coming at you? Where they might have a substantially lower cost base or no cost base. Another thing specific to blockchain is technology and scalability. Do they have measures in place to handle large transaction volumes? Those are some of the things that I'll look at. The problem is a lot of these tokens, especially outside of Bitcoin and Ethereum, the altcoins are primarily speculative asset classes that people gamble on. There's a lot out there that actually have real use case and merit, but at the same time, many of these are just being traded, and just like small cap in public markets, you have to be fearful and wary of pump and dumps or rug scams, as you call it in crypto. So it's important to know what you're investing in rather than just reading, a blog online or reading a Twitter post on why you should buy XYZ token.
One of our participants, one of our attendees, has a follow-up question to that. They write that many blockchain projects have undergone a cleansing phase and there are failures and scams. They want to know if you think we're nearing the end of this phase, where mostly strong, legitimate projects remain, or is there still this sort of bad presence? It's like a dot-com bubble.
The bad presence is going to be there regardless whether it's blockchain or capital markets. There's always nefarious players, and that's just the fact of life. They're all going to be there. And I think because this is a nascent industry and regulation is still very early and somewhat onerous here in Canada and the US, that people skirting that regulation, operating out of other jurisdictions, don't have the protocols in place or oversight from a government body to protect investors. So I think that's still going to be there. I think you just need to be conscious in terms of what you're buying, who's behind it. One of the things that's a constant theme in crypto is many of the key leadership team or developers will not be doxxed, meaning that their identities are not disclosed. So many of these people will operate from a persona, an online persona, where you know very little about them, which obviously creates issues when you start looking at accountability. Have they been behind anything nefarious in the past? Do they have a track record of success? So need to focus on who the team is. I think if you have credible actors in terms of a board or governance structure, then that's very important. It's something that I think will continue to proliferate over the next few years as more and more institutions come there, more innovation. There's new themes in crypto, AI. There's a lot of innovations right now that are creating just a kind of unfathomed retail interest. And right now, as we've had a higher interest rate environment, it's been risk off for most kind of risky securities, which a lot of these tokens or cryptocurrencies have been in over the last few years. So I think if rates start to come down and it becomes more of a risk-on environment, you'll see more capital flowing into everything. And when capital starts flowing into everything, then all these nefarious actors start bobbing their head out and launching tokens and trying to raise capital. And those are the things that you need to be worried about.
So definitely need to pay attention to that. I want to move on a little bit here. The next part of our discussion, it might get a bit techie, a bit geeky, so bear with me. The best known cryptocurrencies, Bitcoin, Ethereum, Solana, they're considered to be layer 1 blockchains. Layer 2 solutions like Polygon and Stacks, they're built on top of those layer 1 protocols. They use the existing security measures, but they try to provide faster and less costly transactions. Now, this proliferation of different types of blockchain has been great for innovation, but it's created what's known as an interoperability problem. Simply put, blockchains have trouble communicating with each other effectively, and there are trade-offs between speed, affordability, and security. Dean, how are you approaching this problem? I understand your company is building a layer 2 blockchain and wallet.
Yeah, I mean, look, for us, we see a lot of, future use cases around operating your own layer 2, speed of transaction and abilities to facilitate, the products and services or provide for the products and services that our clients are looking for will be a big part of it. When you think about, the need for a layer 2, ultimately, as more adoption takes place on these particular chains, the layer 2s you mentioned all live on Ethereum, transaction times and throughput get challenged. And so, ultimately, if these, blockchains or the products and services built on top of them are going to find that mass adoption, they need to perform, consistently at a level that consumers are, satisfied with. And so, that really introduces the need for a layer 2 where, transactions can be facilitated, far more seamlessly and predictably than they could on, say, Ethereum, where, block times may vary based on the moment or what's happening on the chain at a given point in time. And so, I think in terms of the, how do we bring more people to, participate on the blockchain, layer 2s are going to solve a big problem that we've faced historically. In terms of the interoperability, what you're likely going to see are, specialist chains for special purposes. We think of, what we're trying to build and how it's going to, help facilitate what we're trying to provide for our clients through our wallet solution, we think is a good example. There's examples of, platforms that have native chains to help facilitate the transactions that they're focused on to help speed of use and time for their clients specifically. You'll start to see, platforms maybe perhaps like on Solana focus on, trading and transacting because of the throughput that they're able to provide compared to Ethereum. And so we think this is, part of the evolution of this space. Ultimately, when these platforms were designed or architected, I don't think there was the expectation of them servicing, as many people as we expect today. And so through this, maturation process, how can we support more people interacting at the same time or as frequently on chain in a sustainable way that gives them the similar level of service moving forward? And so I'd say that's partially why WonderFi is looking to develop its own L2, is to support the products and services that we want to offer our clients to ensure that we can provide them with that reasonable service level that they would expect.
Russell, your company has launched an exchange traded product that tracks the price of HBAR. That's a token of the Hedera network. It's also aiming for interoperability with other blockchains. How successful has it been?
Look, we have the enviable ability to leverage Anthony Pompliano and Will Clemente's knowledge base in the space. Hedera, and we now have one of their team on our board. It's a consensus-driven, different protocol, very, very fast. We think it's one of the future, top 10s. We have a few others that we think are moving in that direction. But look, the way you have to look at this ecosystem is it really is not all that different than the internet and how the internet grew. You're going to have winners, you're going to have losers. Right now, kind of everything's sort of winning. Obviously, as I was mentioning before, you've got the US who's negative on the entire ecosystem. But the rest of the globe is adopting these, and Hedera is one of them. And we're lucky to have it in our product suite. But you'll see us launching on some other really cool ones as well here in the near future. And really, truly, all we're trying to do is give people the ability to buy these really, really new and transformative tokens or chains or new consensus-driven applications on a traditional regulated, KYC'd exchange. But yeah, Hedera is fantastic. As I mentioned, one of their teams on our board now, and we're looking to do a lot of really, really intriguing things with them as well.
Very cool. Another major issue in the world of blockchain clearly is safety and security. I read a report on CoinDesk recently estimating that nearly $20 billion has been stolen in crypto hacks over the past decade or so, 20 billion. And then you've got the dark web where there's drug dealers, human traffickers, and others who are often paid in crypto. Dan, your company has a division that specializes in helping law enforcement track down the criminals. So I'm wondering, how are you using forensics and data related to blockchain transactions to do this?
Yeah, so Big Digital Assets obviously owns TerraZero. It owns Blockchain Intelligence Group and Netcoins. Last year alone, by the way, Michael, in the US, it was $6 billion that was stolen, primarily in Bitcoin and Ethereum. What we do is we work with law enforcement. We have various software tools. One of them is called Clue. It allows law enforcement to follow the path of money, but also to see the history of various wallets and transactions, which creates a picture that then creates traceability. We had one interesting, this will actually affect everybody here. We had one interesting case recently where a customer came to Blockchain Intelligence Group and it was a CEO of a small cap publicly traded company. And he said, look, I just had $500,000 worth of Bitcoin stolen. And we said, how did that happen? And so essentially what happened was there was a group, and I'll get into it, but a group that, and this is how nefarious things are, a group that basically contacted them and said, we have an investor for you. These small cap mining companies obviously will listen. They said, we'll give you this investment, but we want to be paid our fee in Bitcoin. So the CEO said, okay, well, that sounds pretty reasonable. They said, we want to see proof of funds. Go set up this account, go set up this wallet, seed it with the 500,000 worth of Bitcoin. We'll then meet at this hotel and we will transact and give you the cashier's check for the investment. Unbeknownst to the CEO, he had opened a PDF file on his computer from this group. They had basically compromised his computer. So when he set up the wallet, they already had the seed phrase, all the security credentials. And so when he set it up, he bought the Bitcoin, put it in the wallet, it disappeared. So we were able to trace that into France and to a group in France. We're working with the French police on that one. What is interesting about that, and we're in a unique situation because we have an exchange, but we also have the forensic side. And I think there were 3 or 4 more within about a 10-day period. This is a couple of months ago, where we would be contacted by a small cap public company saying, we need to buy some Bitcoin. Can you help us? We said, tell us what you're trying to do here. And the story was the same. And so you get these bad actors, like I said, $6 billion last year, and they're always going to be looking for opportunities. In terms of the technology, and you were talking about the dark web, you were talking about, criminals and things like that. Blockchain Intelligence Group is launching a couple of new products. Primarily, we've worked to date with FBI, Homeland Security, on a very specific technology. But the same data that we use, which includes attribution of child exploitation wallets, transactions related to North Korean hackers, everything. We're launching 2 new products, one which is aimed at every small or medium-sized business so that they can be compliant, and one that's actually consumer-driven, so that before you actually transact with wallets that you think might be a scam or whatever it is, and you hear a lot about this on dating sites now, is someone says, hey, I've got this great opportunity, here's my wallet, and basically we can screen that, and you can figure out whether or not that wallet has ever been associated with any bad actors in the past. So those are the kinds of things. But yeah, I mean, like everyone knows, crypto does have that element of criminality. The good news is that unlike US cash, blockchain allows for total transparency. So if you have the technology to be able to trace, we are able to actually trace every transaction that we need to.
Well, you mentioned that transparency. I'd like to get your all's thoughts on this sort of dilemma, if you will, between transparency and privacy, right? So on the one hand, we want to be able to see what happens on blockchain, but other people need, respect for their own private data. Who'd like to weigh in on that?
I'll take a quick sort of jump at it. So, we're in the business of transparency, and we talked about central bank cryptos, which I don't know if they're ever going to take off. I mean, the whole point of Bitcoin and the beginnings of crypto is to create decentralization. It was to create some anonymity in certain forms. When we do investigations, we have forensics, or we have wallets where people are screening them before they transact so that they can be warned if they're probably going to get scammed. We don't attribute that to a person's private information or their personally identifiable information. It's specific to a wallet. So when we track a criminal, for example, they've hacked or they've stolen a bunch of money, we don't know who the criminal is until they try to withdraw their money from a centralized exchange or slip up in some other manner. We just know the wallets and the transaction ID numbers. So there is some element of privacy, but if you're going to rip people off for $1 million, eventually, we need some type of oversight to be able to help with that.
Yeah, and particularly as more companies adopt these technologies, risk management has got to be a major concern for them. And forensic tools like you all have, that's got to be helpful for that, for risk management, as well as for government compliance. As I mentioned at the top of the program, investors sometimes conflate cryptocurrencies with blockchain. And I have to admit, at times, it can be hard not to. One question I have is about the impact of fluctuating crypto prices on blockchain innovation and adoption. I mean, when Bitcoin prices fall, do blockchain investments become less attractive? Gorav, what do you think?
Yeah, I mean, I think if you look at Bitcoin and the movement over the last few years, it started to become more and more correlated to tech and the Nasdaq. And then if you look at the altcoins, those are even a bigger beta play on Bitcoin. So given the volatility, right, it's great for traders, but in terms of long-term value investors, it's tough, right? It's hard to wrap your head around something as being a store of value if it fluctuates and has a standard deviation of 10% a week. Retail investor appetite, for the most part, I've seen is that people understand that it's a new space. People want to have exposure to it. They're not quite sure on how to gain exposure to it. And as part of a holistic portfolio approach, they'll typically take a bit of their alts portfolio and carve out a piece for crypto. And typically that's in the form of Bitcoin or Ethereum. Now you have the ETFs, and it's quite easy to do. And then if you look at companies like MicroStrategy and some of the others, Coinbase in the US, those move generally 2, 3, 4% for every 1% movement in Bitcoin. So we've seen actually capital outflows significantly over the last few years as Bitcoin prices have waned. And I think as prices recover, naturally you're going to see more capital, more risk capital flowing into the space. I think, like anything, if you look at cannabis, for instance, right? When things were in the early innings, there was a ton of capital that flowed into the space, and large cap, small cap, mid cap, everything moved. I think crypto is still in the early stages, and people don't quite know how to really play it. So I think that as Bitcoin prices continue to recover past 60 and 70 and hit new highs, I think a lot more capital flow into the space, and then you'll see a lot of movement in some of the smaller token projects or public companies.
Real quick for you, this is a question from the audience, and it's more of a crypto question. They're wondering what percentage of retail investors' portfolio would you allocate to crypto?
It depends on every person, and it depends on your propensity for risk. Personally, I'm a big advocate for the space, so I probably have an outsized portion of my portfolio in crypto. But I think, between your public equities and private equities and, real estate and other holdings that you may have, I think having a good portion in crypto will depend on, how much you can afford to essentially risk. If you're looking at it as part of a, longer term strategy, then I think having some exposure to it is certainly worthwhile if you're a believer in the space. But typically when you're looking at some of these alternative asset classes, those can vary anywhere from 1% to 15 or 20% of somebody's portfolio.
Russell, your company focuses largely on exchange-traded projects, ETPs, that are based on crypto. Give us a quick overview. I mean, so we were just talking a moment ago about investing in specific cryptocurrencies, but you provide an option for investing basically in ETF.
Yeah, look, if you were to peg most of the bad actors of sort of the last 3 to 5 years, a lot of that is being driven by exchanges, unregulated exchanges. FTX, Genesis was another one. These were big bankruptcies. Obviously, they coincided with crypto winter as well. But our view is we want to allow mom, your sister, your baby brother, whatever, people who just don't have the wherewithal or the interest, or quite frankly, the understanding of, creating an on-ramp or opening up an alt exchange account, creating a wallet. So we allow people to buy those 25 currently for us, altcoin, Bitcoin, and Ethereum as well. And we're quite innovative as well. There's some covered call Bitcoin ETFs out there that generate a little bit of return, but we've got a Bitcoin ETF that pays investors 5.65% through the core network, another fascinating, incredible protocol core. But yeah, I think the future is this ecosystem. I think you can look just right around the corner at the internet and the type of returns that you've seen from the internet over the last several decades. And if you, as Gorav said, if you're looking for risk capital and an opportunity to make, 100 bagger, and let's be honest, that's what we're trying to do often with investments is, 3, 5, 10, whatever it is. This is an ecosystem that affords you the ability to have that opportunity.
So one way to do this is with ETPs. And there's a question here saying, are ETPs the same as ETFs?
Ostensibly, yeah. Ours are created so they're basically exactly the same. And it does have to do with nomenclature. In Europe, typically a single asset is an ETP, a multi-asset is an ETF. But yes, ostensibly, they're exactly the same.
So in addition to that route, I'm wondering what may also be another great way for retail investors and family funds to invest in blockchain. Dean, what are your thoughts?
Yeah, absolutely. I mean, there'd be a handful of public companies out there that are working, within the industry, providing a variety of products and services. You've got 3 of them represented here today. Naturally, WonderFi owns and operates some of the largest crypto trading platforms in the Canadian market. And so that would be another avenue where you could come in and buy the physical crypto asset. And in some instances, you'd be able to stake it and earn passive rewards as a long-term holder. Certainly when you think about the popularity that's been generated through the ETFs in the US and, ETP products like DeFi offers, we like to think about it as really opening up the doors to a broader base of investors longer term. You're always going to have individual participants that would be more inclined to invest in Bitcoin or Ethereum if they can do it through, say, their, RRSP or TFSA in Canada or their 401k in the US. And what we like to think is that's really the starting point of their journey or their evolution within the digital asset, ecosystem as a asset class for them to invest in. And so that really opens up the doors for them to understand the nuances between Bitcoin and Ethereum. And then from there, what are some alternative layer ones, Solana being one, and so on and so forth. What is a layer two, and how do those help capture value? And do I want to own tokens within that subsegment? There's DeFi protocols out there that can also offer, meaningful returns if you understand the technology and how value flows to the token holders. And so we really think about, the first step being owning some Bitcoin or some Ethereum. You're naturally going to be more inclined to understand the technology better, the problems that are trying to be solved, and then some of the alternatives that are looking to either solve similar problems or complementary problems within the broader ecosystem. And so, whether participants enter in through the front door of an ETF or an ETP, or come through platforms like BitBuy or CoinSquare and buy some Bitcoin or Ethereum, we really look at it as the start of a long journey that will, eventually over time lead to, well, what other exposure can I get across this ecosystem now that I understand it better, understand the technologies, and maybe in some cases actually get to use some of the technologies as it relates to coming to platforms like ours and either being able to stake assets or withdraw your Ethereum to a MetaMask wallet and then interact with some, DeFi protocols or purchase an NFT or whatever the use case may be. Your understanding of this technology really broadens with the use and learning. And we really think, buying some Bitcoin or Ethereum is the natural starting point to start having a vested interest in learning more and understanding more. And so ultimately, traditionally, that has been dominated through on-ramps like BitBuy, CoinSquare, Netcoins, etc. But now these ETFs and ETPs are really opening up that entry to a much broader audience. As Russell mentioned, there's a whole subset of people that for whatever reason today will just not allow themselves to open up a crypto account. But if they can access exposure through, brokerage accounts that they already have opened and, are comfortable with, well, that's a natural entry point. And so that will just open up, the audience that we can service over time.
Well, and we're definitely seeing changes in that area this year. I mean, since January with the SEC allowing spot Bitcoin ETFs, we've seen a lot of institutional money coming in. And I think that spiked a couple months ago, but still having an impact on the sector. There's a question in the chat, and it's something that I had on my mind as well. And it's one of the hottest topics in the worlds of tech and investing, and that's artificial intelligence. KPMG calls blockchain and AI, quote, the new power couple. Blockchain can help guard AI's intellectual property, while presumably AI may be able to help accelerate the development of new blockchain applications. Dan, what are you seeing in terms of the intersection of these two technologies?
Yeah, it's interesting. Two of our companies are integrating AI right now. I'll give an example of both. So TerraZero, as I mentioned earlier, builds immersive worlds for existing audiences like Napster subscriber. Every one of those users needs to have their own apartment in which they can listen to the music, experience the content, buy merchandise, whatever. But then there's also tens of thousands of artists that have to have their spaces. Well, my team of artists can't build all of these bespoke experiences one by one. It takes too much time. So we brought in AI to do generative scalability. So in other words, we can now pull content automatically from different sources around the web and populate a room. So in other words, even though I'm not right now working with Britney Spears, for example, there will be a room that's Britney Spears, but it's pulled content and we've had nothing to do with it. We still have to go in and make some touches and things like that because it's not perfect. In terms of Blockchain Intelligence Group, this is really interesting. So Blockchain Intelligence Group has been around for 9 years, like I said, working with law enforcement, financial institutions, and others to map out Bitcoin and Ethereum blockchains extensively. We have over 9 billion data points. This doesn't just include transactions, but also the labeling, the attribution of this wallet belongs to this exchange, this wallet belongs to this drug dealer, this wallet belongs to whatever. the North Korean group Lazarus is responsible for most of the crypto hacks last year. How can we use AI to take this enormous amount of data and give us something meaningful, whether that means that we can understand trends of how a hacking group might begin the process of the action and be able to maybe caution against it, or with regards to price fluctuations, and how can we help Netcoin's traders have some insight into what might happen. So that's kind of the two ways that we're using AI in our company.
So, I mean, you also are involved with crypto miners, and I'm wondering whether AI might make it easier for miners to crack those mathematical puzzles that are behind Bitcoin and other tokens that use proof of work. What do you think?
Yeah, I was the CEO of DMG Blockchain, which is one of the larger Bitcoin miners from 2017 to 2021. And one of the challenges, we were pretty much 99% Bitcoin. We always worried about quantum computing. That's the only thing that's really going to hurt proof of work mining. Where AI is very useful for Bitcoin miners is actually Bitcoin mining fluctuates in profitability. It can be very challenging at sometimes if the difficulty and hash rate is too large, if the price of Bitcoin is too low, or your operational costs are too high. So it's very seasonal in terms of when it's profitable and when it's not. And one of the trends that I'm seeing that I think is exactly what needed to happen is these large Bitcoin mining facilities are essentially infrastructure companies. They have enormous amounts of power. In fact, when I ran our Bitcoin mine, we had enough power to power Kelowna, a city of a couple 100,000 people. That's what we used in our facility. So what do you do with that power and that infrastructure when the Bitcoin mining or other mining isn't as profitable as you'd like it to be? Well, you can now use that for compute power. You can now use that for AI and rendering and things like that. So I think you're seeing hybrid businesses. The Bitcoin miners are also going to become AI data centers. And I think that that's a pretty solid move on their part.
There's another interesting story that caught my eye recently regarding AI. There's a company in San Francisco. It's called Story. Don't know if you all have seen this. It's using blockchain to prevent copyright theft. And it's using AI to do that. So the company's backed by Andreessen Horowitz, and it enables creators to prove they made a piece of content and that they're actually the IP owners by storing their intellectual property on the Story platform. Want to guess how much this blockchain company is worth? Well, Story just completed a funding round that values it at more than $2 billion US. Gaurav, I want to come back to you in terms of this idea of what and how people can be investing in blockchain. Family funds who may be watching this webcast right now, what advice do you have for them?
I think you should do some homework before you put your capital anywhere. And, at the very least, you can, if you don't understand how to build, interact with the on-ramps into crypto, set up a wallet, then the easier path would be to buy an ETF or buy, one of these companies operating in the space. And, as Dean mentioned, I mean, there's three of them right here on the call, but there's a whole ecosystem of companies operating in the space. And I think it's worthwhile, doing your homework, understanding your appetite for risk, and having exposure to different asset classes, even within crypto. If you're relatively new and want to have something, then, BTC, Bitcoin, Ethereum, Solana are great places to start. And the other place would be, some of the picks and shovels companies using blockchain technology to make the world better. You see that a lot of volatility throughout market cycles on these speculative asset bubbles. And the companies that get hit hardest, or the tokens that get hit hardest, are those without any real life use case or utility. So the ones that actually have real utility, real life use cases, where they're actually working to solve a problem and are building, technology with, something that's ring fenced and has commercial viability, those are going to be the ones that actually have resilience even in down markets. They're not going to drop as much as the new kind of flavor of the day.
Yeah, I think that's great advice. Look and see whether there's actually a real use case or not. In the chat, Dean, there's a question for you. What do you think needs to be built within the blockchain space that will take us to the next level? And how can you support entrepreneurs who are doing that?
Yeah, it's a great question. Look, I think, it sort of touches on some of the stuff we were talking about, but, industry that's so new and with so much excitement around it, there leads to a lot of, I guess, competing incentives or interests. And you think about, let's take the popularity around layer twos. What does that ultimately mean? There's a ton of VC-backed layer twos that are primarily focused on, let's drive some early user engagement, let's incentivize and subsidize this behavior, let's launch a token, and, let's make a ton of money in the process. And then what you ultimately see is, months later, years later, these chains turn into what's, commonly called ghost chains in the industry, where activity dries up. There's little to no incentive to use these platforms, and, the activity falls off a cliff and never recovers. And so, you look at what Coinbase did with Base, they're a great example. Here's a company that's going to be around for the long term. Their incentive structure is clearly different than someone that is starting a layer two net new with VC backing. And, we think we're in a similar position. WonderFi has, core operating assets with its exchange businesses. We recently launched them into Australia and Asia to further our reach with those products. But those are sustainable exchanges that can help drive innovation and allow us to build out new products and services. So our incentive structures in terms of building out a layer two are more similar to a Coinbase than they would be to, someone net new entering the industry. And so for us, it's all about building a ecosystem that is viable over a long period of time, that is incentivizing participants and developers in the right way to come and build on our platforms, understanding that we have a long-term view, and that, we think that over many years, you will see, the ebbs and flows of certain chains, but the incentive structures and the alignment of incentives will ultimately lead to a lot of these layer twos, over time becoming non-existent or obsolete. And so we think that there is a staying power that platforms like us have that really will enable development and, sustainability within that ecosystem over a long period of time. And, in terms of, what we think it takes to get to that next level, certainly, fewer instances of, scams or, fraud, it certainly will help. But over time, you will see value and activity flow to these types of platforms. You're starting to see it with Solana, where, on the back of FTX, many expected it to, fall down a similar path to the one I've described, but they really doubled down on the investor community on finding their right product market fit. And there's an example of an ecosystem that assumably will be around for a long period of time. And so we're trying to do something similar and build this the right way. And I think over time that will resonate with not only the participants, but developers in the space looking for ecosystems to build on top of.
Dan, like Dean, your company also operates a crypto exchange, Netcoins. And there's a question here in the chat about whether traditional finance institutions and DeFi platforms can collaborate, and if so, how? Do you see that happening, or do you think there's still going to be basically, are they going to be enemies, traditional Fi and DeFi?
Yeah, it's interesting. It's an interesting topic. So Netcoins operates in Canada, is also the only Canadian licensed or a restricted dealer, also able to now trade in the US. It's always been, I don't know if you guys remember, but I've been a CEO of a crypto company for the past 7 years, 8 years. And at the beginning, or even up until a couple of years ago, the traditional banks didn't even want to bank us. It was very difficult to get bank accounts. They saw crypto as a threat to what they do. What I see as Netcoins and what Netcoins is building is an audience of users that will appeal to traditional finance, to traditional banks. What I mean by that is there will be a time soon, and we're in kind of a unique position because not only do we have the Netcoins platform for trading, but we also have the compliance tools in Blockchain Intelligence Group. And so there will be a time when the large banks want to incorporate crypto, and how are they going to do so? And what makes a crypto exchange or platform valuable to a traditional bank, for example? Well, it's for customer acquisition. It's a new customer, it's a young customer. And traditionally, the banks target young customers because with banking, traditional banking, you pretty much get an account and you have that account for 20, 30 years. So I see them coming together. I don't see them splitting apart any further. And I see that happening sometime in the next couple of years is probably when you're going to start seeing that.
Russell, I'm going to give you the last word on this one. What do you see about this conflict between traditional FI and DeFi?
I'd rather it not even be referred to as a conflict. This is a natural evolution of capital markets. It's a natural evolution of opportunity. My view is that this is an opportunity to make transformative wealth for individuals, especially in North America. You've seen the SEC and the Canadian regulator, like I mentioned before, taking a very perplexing position on this. You can even just look at Gary Gensler when he was fighting Grayscale. I can't even remember what it was. I think his tenor was effectively Grayscale, Bitcoin, and allowing these to get into the ETF form is bad for the US dollar. My retort would be printing money. Just today, I think the US debt or deficit got to 1 trillion. That's what's bad for the US dollar. So these are not the problems. These are the results of the problems. And it's an opportunity for everyone to invest and, in my opinion, make potentially internet type wealth. So I don't view it as a conflict at all. This is an opportunity.
All right, thank you for that. A quick note to our viewers, a reminder, please be sure to go to investorTV, to our website, investor-television.com, to sign up and receive exclusive invitations to future panels. Coming up, we'll be exploring copper, green tech, mining in Africa, and much, much more. Gentlemen, I want to thank you all very much for joining us today. It's been an insightful conversation. While blockchain has a lot of use cases, the technology is in many ways still in its infancy. Some observers say blockchain can only truly be considered successful when there is mass adoption, let's say more than 1 billion users, but that most people don't even realize they're using the technology. Until then, there are certainly a number of great ways to invest in the sector, and I want to thank each of you for sharing your insights.
Thanks for having us.
Thank you.
And to our viewers, thank you so much for joining us today. Our next panel is in 3 weeks on Friday, October 4th, when we dive into the world of copper. Thank you very much for watching Navigating Capital Markets here on Investor TV. I'm Michael Switow.